Welcome to XRP Pro Ledger. And if you have been waiting for the moment where everything Larry Fink has been describing from the world's most powerful financial stages actually becomes real and tangible and provable, that moment is today, and the numbers attached to it are going to stop you in your tracks. Ripple has officially partnered with Kyobo Life Insurance, one of South Korea's largest and most established financial institutions, to tokenize government bonds directly on the XRP Ledger. And that is not a pilot program. That is not a memorandum of understanding. That is a live, real-world deployment of the exact unified ledger architecture that the chairman of BlackRock has been describing for months. Layer on top of that the fact that Goldman Sachs just revealed they hold $153.8 million in XRP ETFs. That XRP has officially flipped BNB to become the #4 largest cryptocurrency on Earth, with $3.9 billion in daily volume. And that Standard Chartered has given a research-backed short-term target of $2.80. What you are looking at today is not a news cycle. It is a convergence. Let us start with Larry Fink, because understanding his vision is the key that unlocks everything else happening in this video. For months now, Fink has been standing at the microphones of the World Economic Forum, BlackRock investor calls, and global financial summits, repeating the same thesis in slightly different language every single time. Everything will be tokenized. Every bond, every equity, every piece of real estate, every financial instrument that exists in the global economy will eventually live on a single universal digital ledger. Each asset will carry a unique digital identifier. Settlement will be instant. Movement of value will be borderless and frictionless. The old SWIFT-style correspondent banking delays will be eliminated. And every participant in that system, every institution, every counterparty will be identified within the ledger infrastructure. That is the vision Fink has been laying out from some of the most prestigious financial stages in the world. And analysts who covered his most recent remarks noted immediately that his technical description of this unified ledger reads almost word for word like the existing architecture of the XRP Ledger. Now here is where the conversation shifts from theory to reality, and this is the part that separates this channel from every other XRP analysis you are going to watch today. Larry Fink can describe a unified ledger from a stage in Davos all he wants. The question that actually matters for your portfolio is which blockchain infrastructure is being chosen right now by real institutions with real money to execute that vision in the real world. And today, we got the most concrete answer to that question that XRP holders have ever received. Ripple's partnership with Kyobo Life Insurance to tokenize South Korean government bonds on the XRP Ledger is not a theoretical demonstration of what XRPL could do someday. It is a live institutional deployment of exactly the use case Fink describes: sovereign debt instruments, one of the largest and most liquid asset classes in global finance, being tokenized with unique identifiers and settled instantly on a digital ledger. Fink described the destination. Ripple already built the road, and a major institution just drove down it. The choice of Kyobo Life Insurance as the partner for this deployment is worth examining closely because it tells you a great deal about the institutional credibility that XRPL now commands in one of Asia's most sophisticated financial markets. Kyobo Life Insurance is not a startup or a crypto-native firm experimenting with blockchain on the margins of its business. It is one of South Korea's foundational financial institutions, managing enormous pools of long-term insurance capital that must, by law and by fiduciary obligation, be invested with maximum security and reliability. The fact that Kyobo chose the XRP Ledger as the infrastructure for government bond tokenization means that XRPL passed every single internal risk assessment, every compliance review, every legal and regulatory evaluation that a conservative, systemically important financial institution requires before committing to a blockchain platform. That institutional due diligence seal of approval from Kyobo is worth more than 100 analyst reports saying XRPL is theoretically capable of this work. While the Kyobo Life deal was the most structurally significant development of the day, the Goldman Sachs disclosure landing at the same time provides the institutional finance context that makes the full picture even more compelling. Goldman Sachs has revealed a position of $153.8 million in XRP ETFs, and the significance of that number goes beyond the dollar amount itself. Goldman Sachs is not a firm that makes speculative allocations. Every position Goldman holds at this scale represents a conclusion reached through layers of internal analysis, legal review, risk committee approval, and strategic alignment with the firm's broader view of an asset class. Goldman's XRP ETF holding is the firm's institutional declaration that XRP has cleared every bar required to sit inside a Goldman Sachs managed portfolio. And in the world of institutional finance, when Goldman makes that declaration, every other major asset manager, pension fund, and family office takes notice and updates their own internal analysis accordingly. The ETF inflow data surrounding Goldman's position tells an equally important story about the pace and consistency of institutional demand that is building underneath XRP's current price. Daily inflows into XRP ETF products through vehicles led by Bitwise and Franklin Templeton are running at $11.2 million per day, and that figure represents scheduled, recurring institutional capital deployment rather than speculative retail enthusiasm. $11.2 million per day is not a number generated by individual investors buying on excitement. That is registered investment advisors executing allocation strategies, institutional treasuries following approved frameworks, and family offices deploying capital according to research-backed thesis. On an annualized basis, that daily inflow rate translates to over $4 billion per year flowing into XRP ETF products. And that pipeline was established and is running before the Kyobo Life deal, before the full Clarity Act passage, and before the complete resolution of every remaining regulatory question. The institutional demand floor under XRP is already being built, and it is being built with real recurring capital. The market cap milestone that XRP achieved today deserves a serious and contextual analysis rather than just a headline mention, because flipping BNB is not like passing a random altcoin in the global rankings. BNB has held the number 4 position for years, with every structural advantage working in its favor. The entire Binance ecosystem, trading fee discounts, launchpad access, billions in programmatically locked liquidity, and one of the most aggressive token burn mechanisms in crypto, all designed specifically to support and defend its market cap ranking. XRP displaced all of that with $3.9 billion in genuine daily volume, driven by institutional accumulation, regulatory clarity progress, and real-world utility deployment. That is the market's verdict on which asset has the stronger fundamental foundation. And that verdict was delivered today with enough volume behind it to make the ranking change structurally meaningful rather than a temporary price wick that reverses overnight. Standard Chartered's revised short-term price target of $2.80 for XRP provides the analytical framework for understanding where the current price sits relative to where the fundamentals point. And it is important to engage with this target seriously rather than either dismissing it as too conservative or inflating it with unrealistic projections. Standard Chartered is a global banking institution with a research division that stakes its professional credibility on the accuracy of its forecasts. $2.80 is not a floor estimate, and it is not a maximum upside scenario. It is a research-backed projection built on the exact institutional and regulatory foundations that are materializing right now. From XRP's current range of $1.47 to $1.48, the Standard Chartered target represents approximately 90% upside, and that target was set before the Kyobo Life government bond tokenization deal closed, before Goldman Sachs disclosed its full ETF position, and before the BNB flip confirmed the market cap repositioning. Every one of today's developments is a tailwind that strengthens the Standard Chartered thesis rather than a development that was already priced into their model. Now let us bring the BlackRock thread back to center, because the Fink narrative and the live data are not two separate stories running in parallel. They are the same story, told from two different angles. Fink describes the destination from the stage. The Kyobo Life deal proves the destination already exists, and real institutions are already arriving. When Fink talks about a unified ledger where government bonds carry digital identifiers and settle instantly across institutional counterparties, South Korean government bonds are now doing exactly that on XRPL right now. When analysts flag that Fink's technical requirements, instant settlement, interoperability, unique asset identifiers, frictionless global movement, map almost word for word onto the XRP Ledger's existing architecture. The Kyobo Life deployment is the empirical proof that the mapping is not theoretical. The architecture Fink describes is not being built. It was already built, and the institutions that matter are already using it. The complete picture assembling itself around XRP right now represents a convergence of institutional, regulatory, utility, and market structure developments that this asset has never experienced simultaneously at this scale and at this speed. Larry Fink's unified ledger vision is being executed in real time on XRPL through the Kyobo Life government bond tokenization. Goldman Sachs has committed $153.8 million to XRP ETFs, with $11.2 million flowing in daily. XRP has flipped BNB with $3.9 billion in volume to claim the number 4 largest cryptocurrency ranking in the world. And Standard Chartered has given a credible, research-backed short-term target of $2.80 that was set before today's catalysts landed. The institutions that describe this future are now funding it. The infrastructure that was built to serve it is now being used by sovereign-level financial partners, and the market is beginning to reflect a reality that serious long-term holders have understood for years. The pipeline is not being assembled anymore. It is already running. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.